Trading the markets requires discipline, strategy, and finely honed skills. Traders are up against the best and brightest Wall Street has to offer. At TraderInsight.com, you can look over the shoulder of one of America's top traders. Join Dr. Adrian Manz and a cast of highly talented traders as they earn their living navigating the markets, one stock at a time, one trade at a time. TraderInsight.com. Strategy, discipline, results.
For TraderInsight.com, this is Adrian Manz, and this is Stocks and Sectors on the Radar for Wednesday, November 12th, 2008. Well, we got pretty much what we expected out of the Dow today. We were down 176.5, landed right on the support line that we've been looking at for the last few sessions. We had this minor support up top here that marked the top of trading on the day, but of course that is where the market opened. We never really got a decent test of that. Things just generally don't look so good for the overall market as they haven't. We need some very, very positive news to come out to give this market a reason to turn around, and that has just not been in the cards for us. On the day, we had 584 advancers, 2,504 decliners on volume of 1.22 billion shares. So volume was heavier than we thought it was going to be, up pretty significantly from yesterday's trading volume. That's generally speaking a good thing. Of course, in today's trading, it proved to be a convincing distribution day rather than a day that would give us some recovery. The other major indices, the S&P 500, NASDAQ 100, NASDAQ Composite, all doing pretty much the same thing. We've got some support on all of these that's a little bit more minor than what we saw on the Dow, but it is nevertheless holding up. If you go back on a monthly chart, then you can see some slightly better reasons for there to be some support at the lows. But even this area that we're in right now is pretty scarce on a monthly chart that goes back all the way into 2001 data. So I'm not expecting that those markets are going to hold up very well if they continue to move lower, if we continue seeing the weakness in the Dow every day. But given what happened in the Dow, I thought it was worth for tomorrow's trading to take a look at a couple stocks that I thought might be moving lower. There's not much that has a clear path lower anymore. Everything's down so hard as it is. But for one, we had American Express. American Express went ahead and declared itself a bank today, and I'm going to go out on a limb here and say that when the rest of these guys became banks, we know what happened. They headed south, and I have got sort of the same expectation for Amex. So AXP, I'm going to be taking a look at the short side on this one over the next few sessions, going over probably the next week or so. Another play on the downside is this fastball setup in Mobile Telesystems, which is a Russian company, of course, and boy, we just really got hammered today. That's a fastball setup, fastball type 1 setup for those of you who have read around the horn and are familiar with the pattern. You know that we are looking for a move below that low tomorrow to confirm today's price action, and then we're going to be looking for a possible entry that can get us all the way down into the 2311 area on a multi-day, or just down into this 2537 area on the session for Wednesday's trading. So if it happens, if we see it move lower, the key thing is going to be we're going to have to be able to identify support and resistance on an intraday chart to define a clear stop-loss level. And then the last stock that I want to look at for tomorrow's and the next few weeks worth of trading is going to be Eaton. So Eaton is going to be sensitive to the news on General Motors. General Motors, of course, has had some bad stuff coming out over the past few sessions. It's definitely dragging on the Dow, but these OEMs are going to they're going to be affected as well, and it's just smart to keep them on the radar. And this thing's still trading at a pretty decent price. If there's downside in it, the next area of support that it's going to hit before people start worrying about covering is down around $40. That's $3.23. So I'm definitely going to be looking at short side on this one if the news about the automakers continues to be bleak. So that's that. Everything from yesterday. If you want to review yesterday's video and have a look at what happened in those today, we had some of the expected moves that we were talking about yesterday. I'm not going to review them now, but feel free to go back and look at the video. The link is still good, and you can see what behaved in which way and how that related to the direction the overall market took. So for TraderInsight.com, this is Adrian Manz, and this is Stocks and Sectors on the Radar.